Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. I'd like to offer you some foreign exchange charts to look at. And the first chart I'd like to look at is the euro against the dollar. Now on this chart, after an indecisive long-legged doji cross on Tuesday, we had the decision made yesterday, and it was a key reversal down with the lowest close since early April. The market punched down once more below the old filled gap, which is 108.20 to 107.77, plus the finessing the diamond uptrend, which is currently at 107.56 once more. But did not manage to close below it though. Today we're lower, well into the old gap and approaching the April low at 107.66. Now a little more on this diamond. Those of you who have had the opportunity to see my daily charts may be wondering, what is that big diamond thing you've drawn that's even below the market low back in March? Well, it's exactly what it says on the tin. I've placed a possible diamond formation over the action from mid-January today. It is a proposal so far, though I'm not yet certain if it is a diamond bottom, top, or continuation pattern. It's too early for that. I would caution that I have finessed this pattern to suit market action, but my finessing days on this pattern are rapidly coming to an end. If it requires too much more finessing, then I'll retire this pattern. Watch this space. The next chart to look at is cable, aka sterling against the US dollar. A small bullish white soldier yesterday, a seeming reaction to the previous session's move below and close under the big 50% Fibonacci line for the whole March action at 123.04. Today we're steady so far, just above the 50% Fibonacci line right now. We're still overhead the lesser Fibonacci line at 125.17 and below the lesser Fibonacci line at 121.71. The next chart to look at is euro against sterling. Now pull back down yesterday, possibly a bearish army as well, after the previous session's successful bullish challenge to the combination of the short stroke medium moving average, currently 87.41, and the long moving average, currently 87.31. Today the market is lower again and now is challenging the same moving averages, but from above this time. Meanwhile, overhead, we still have the 50% Fibonacci line for the whole December 2019 to March 2020 move at 88.87, yet still successfully closing over the moving average combination. Now, I mentioned before my idea that the last 4 weeks may be a type of sharp double top action, that we maybe have an initial target X on the downside in the 86.5 area. However, yesterday's significant move higher seemed to negate that full target level, and I suppose the market would have to be satisfied with a low of 86.80 on the recent move. I'd just like to qualify that if we do carry on lower to say 8,700, then I'll resurrect that idea. Next chart to look at is US dollar against the Indian rupee. After all the recent bullishness and reaffirmation of bullish moves, yesterday we had a big counter, a big bearish key reversal down and bearish closing long black Mariposa right at the top of the market, was making a new high and possibly a pipe top as well. The market finished and closed once again, unsurprisingly, within the previously mentioned 76.35 to 76.45 congestion zone. Meanwhile, keep maintaining a close eye on the short moving average below. Well, that's around about 76.20. Today, we opened a little higher, but dropped down right away, down through the significant congestion at 76.38, plus the recently influential short moving average at 76.23. And right now punching down through the significant projected 50% Fibonacci line at 76.10. We're actually not that far away from making a weekly key reversal or outside week. Therefore, watch out for any attempts at 75.80 or below. The final chart to look at is US dollar against Brazilian real. After a day's holiday, the market took off higher once again yesterday for bullish long white Mariposa. New all-time high and new all-time high close. The market's rise was only slowed by the nearby overhead combination of the middle side, currently at 550.54, of the recent March to April Andrews pitchfork, and the upper time, currently 549.42, of the big old mildly bullish 2013-2017 shift pitchfork. That's where the resistance is currently situated. Further ahead, we have the recently projected 50% Fibonacci line at 554.75 and the upper time currently at 570.93. That about wraps it up. So good trading and stay safe in the markets and in real life.